Good day everyone. The topic that we will be discussing for today is about diluted earnings per share, multiple potential ordinary shares. The recent chapter discussed by Ms. Ivy Dean Cruzado was the diluted earnings per share, but it refers to share options. Now we will be tackling about multiple potential ordinary shares. We already know that earnings per share is equal to net income divided by total ordinary shares. So, in this chapter, we will be tackling about the diluted earnings per share is equals to profit or loss plus after the tax interest expense and convertible bonds divided by weighted average number of outstanding ordinary shares plus incremental shares arising from the assumed conversion or exercise of dilutive potential ordinary shares. The first problem will be discussed by Ms. Rachel Ann Deasol.
Now let's have the first problem for this topic. We have Hansel Company that had 200,000 ordinary shares, 20,000 convertible preference shares, and 5 million pesos of 10% convertible bonds outstanding during the current year. The preference shares are convertible into 40,000 ordinary shares. Each 1,000 pesos bond is convertible into 5 ordinary shares. During the current year, the entity paid dividends of 20 pesos per share on the ordinary shares and 40 pesos per share on the preference shares. The net income for the current year was 8 million pesos and the income tax rate is 30%. In this problem, we're going to get the basic earnings per share, the total number of potentially dilutive ordinary shares, and the amount of diluted earnings per share. Let's first compute for the answer for the first question, the basic EPS. So we have a net income of 8 million pesos. Sa preference dividend, meron tayong 20,000 na preference shares times 40 kasi nga meron daw 40 pesos per share sa preference shares. So meron tayong 800,000 pesos na i-deduct natin sa 8 million na net income. Thus, ang ordinary shares natin ay 7,200,000. Using the formula for the computation of basic EPS, we have 7.2 million over 200,000. Ang basic EPS natin ay 36 pesos. For question number 2, we have to find out if the convertible shares are potentially dilutive. So, we have to know the amount of the preference shares and the bonds payable. If the convertible bonds is lower than the basic EPS, then the convertible securities are potentially dilutive. For this problem, we have to find the preference dividend, which is 800,000, and the interest bonds amounting to 350,000, which allows us to solve for the incremental EPS. So we have, using the formula of finding out the preference share and bonds payable, we have a preference share of 20 and a bonds payable of 14. As we can see, the incremental EPS is lower than the EPS. Thus, the convertible securities are potentially dilutive. Now we can solve for the dilutive ordinary shares by finding the sum of the potential ordinary shares from conversion of preference shares amounting to 40,000 and the potential ordinary shares from bond conversion amounting to 25,000. So, we have a total number of potential dilutive ordinary shares amounting to 65,000. For question number 3, note that the multiple potential ordinary shares shall be ranked starting with the lowest incremental EPS. By using the formula net income over shares for solving the amount of basic EPS and diluted EPS, we can see that the EPS is decreasing, which means that the potential ordinary shares are dilutive. So for basic EPS, we have a net income of 7.2 million and the shares of 200,000, which allows us to have a basic earnings per share amounting to 36 pesos. In order to get the amount of diluted EPS, we have to add the convertible bonds payable to the basic EPS. So now we have a net income for diluted EPS of 7,550,000 and a share of 225,000. So we have a diluted EPS of 33.56. Adding the convertible preference shares to the diluted EPS, we now have 7,550,000 plus 800,000. We have a diluted EPS amounting 8,350,000. For the shares, we have 40,000 convertible preference shares. Adding that to 225,000, we have a total shares of 265,000. Using the formula for diluted EPS, we now have a diluted EPS amounting to 31.51, which is the amount to be recorded as a diluted earnings per share.
So, dito po sa problem na ito is same lang po dun sa problem number 1. Kaya, no need to explain na po kasi baka lalo kayong maguluhan. Na-explain naman po nito ng maayos. So, no need to explain na po. Proceed na po tayo sa problem number 3.
For the third problem, at the beginning of current year, Helen Company had 100,000 ordinary shares outstanding and 50,000 with 7% for 100 pesos par cumulative and non-convertible preference shares outstanding. On March 1, the entity purchased 24,000 treasury ordinary shares at 45 peso per share and sold 8,000 treasury shares on October 1 at 50 per share. Also, outstanding on January 1 were share options to buy 50,000 ordinary shares at 40 pesos. The market ordinary price averaged 50 pesos during the year. No share options were exercised during the year. On January 1, the entity issued 5,000 for 6% bond at a face amount of 1,000 per bond. The bonds are convertible into 25,000 ordinary shares, and none of the bonds had been converted during the year. The total net income was 5,400,000 for the current year, and the income tax rate is 30%. The question we are going to answer here is, number 1, what amount should be reported as basic earnings per share? What is the number of potentially diluted ordinary shares? And what amount should be reported as diluted earnings per share? Para sa ating question 1, ang tamang sagot is letter C, 61.59. Ang pagkuha ng basic earnings per share ay nagmula sa net income divided by the average shares outstanding. Ang average shares outstanding natin ay nagmula sa January 1 outstanding shares of 100,000, March 1, which is 24,000 treasury ordinary shares times 10 over 12 for the fraction of March. So, 20 less it should be deducted. Mababawasin ang 20,000 tapos sa October 1, ang 8,000 times 3 over 12 ay 2,000. So, 100,000 minus 20,000 plus 2,000 is equals to 82,000. Sa pagkuha naman ng net income for ordinary shares, ang total net income ng Helen Company ay 5,400,000. Ang preference dividend nila ay 7% times 5 million. So, the answer is 5,400,000 minus 350,000. The total net income ordinary shares is 5,050,000. Using the formula for basic earnings per share, net income divided by average shares outstanding is equals to 5,050,000 divided by 82,000 is equals to 61.59. For our question number 2, the answer for total ordinary shares is 35,000. Nakuha po ito sa pag-a-add ng proceeds from exercise of share options na 50,000 times 40 per share. So, it is 2 million pesos. The share options, which is 50,000, minus treasury shares acquired, which is 2 million divided by 50 is equals to 40,000, plus potential ordinary shares, which is the share options of 10,000 and potential ordinary share bonds of 25,000. The total potential ordinary shares is equal to 35,000. Take note that the preference shares are non-convertible. For the third question, for problem number 3, what is the diluted earnings per share? So, ang formula po sa pagkuha ng diluted earnings per share is adjusted net income divided by total ordinary shares. To compute for the adjusted net income, we computed the total net income, which is 5,400,000 minus the dividend on non-convertible preference shares na 350,000, tapos the net, which is equal to net income ordinary shares of 5,050,000. The interest on bonds net of tax is 6% times 5 million pesos and multiplied to 70%. the total adjusted net income is 5,260,000. It will be divided to the total ordinary shares, which is average ordinary shares outstanding, which is 82,000, plus potential ordinary shares of 35,000 equal to 117,000. So, using the formula, 5,260,000 divided by 117,000 is equals to 44.96.
Problem 35.4. Camiguin Company reported the following capital structure at year-end. So, ito po yung ating given. Ang hinahanap po natin dito ay what amount should be reported as basic earnings per share and what is the total number of potentially diluted ordinary shares. For our solution po, for question number 1, madali lang po, hanapin lang po natin ang basic earnings per share. Alam naman na po natin to, net income less preference dividend is yung net income to ordinary shares po natin na 550,000 divided by the number of shares actually outstanding. We will arrive at the basic EPS of 5. For question number 2 naman po, medyo mahaba. Kailangan po muna nating hanapin yung effect on net income nung conversion na naganap. On preference dividend po, 20,000 shares na given, multiply by 5 per share po, 100,000. And interest on bonds na 2 million times 10% na stated rate, multiply by 70%, which is net of income tax rate. It will give us 140,000 shares. Ito pong epekto sa net income. These are the number of shares that are avoided or is not are avoided or wala silang contribution dun sa ating net income sa ina-avoid sila because of the conversion. And this amount, ito po yung gagamitin natin sa pagkuha ng incremental earnings per share or yung tinatawag nating change, whether positive or negative, sa earnings per share, the incremental earnings per share. Under convertible preference shares po, gamitin po natin yung 100,000 na nakuha natin, divide by 40,000 shares, which is the ordinary shares upon conversion of the preference shares. It will give us an incremental EPS of 2.5, and similar lang din po sa convertible bonds natin, which is the 140 from the interest on bonds divided by 30,000, which is the ordinary shares upon conversion of the bonds payable. It will give us an incremental EPS of 4.67. Then, para makuha po natin yung total number of potentially dilutive ordinary shares, we have potential ordinary shares from share options. Saan po galing yung 5,000? Yung 5,000 po is galing po dito po sa share options na 20,000. Nilas po dito yung assumed treasury shares. Kasi po, ina-assume po dito sa diluted earnings per share na yung proceeds po na makukuha po sa ating pag-exercise ng share options ay na-allocate or nalalagay po sa treasury shares. So, 20,000 multiplied by 15 per share is equal to 300,000. Ito po yung ating proceeds na kailangan po nating i-divide sa average market price na 20 pesos and makukuha po natin yung 50,000. Last lang po natin yun. We have potential ordinary shares from share options na 5,000. Saan po galing yung potential ordinary shares na preference? Given po yan. Yan po yung ordinary shares po natin na upon conversion is nagkaroon po ng 40,000, and the funds payable po na ito po yung incremental shares upon conversion po na 30,000. I-add lang po, we have a total number of 75,000 potential dilutive ordinary share. For the next question po, meron po tayong sinusunod na ranking dito. The share options are ranked first, the preference shares second, and the bonds payable third. Ang nirarank first po is yung may lowest na contribution in terms of incremental per shares. Nanguna po ang share options. Why? Kasi po yung share options daw po is walang effect sa net income. So, 0 po ang magiging incremental per shares niya kasi 0 divided by 5,000 is 0. Ang sunod na low po ay yung ating convertible preference shares dahil ang kanyang incremental EPS ay 2.5. And the next one po, sumunod na po ang convertible bonds na 4.67. So, ang pagkakasunod-sunod po natin is share options, convertible preference shares, and convertible bonds. Ilapat lang po natin yung mga amount sa basic earnings per share po. Galing po sa unang question, we have 550,000 na net income divided by 10,000 shares. Our basic earnings per share is 5. And ito po, share options po, 0 po, walang effect sa net income. Pero pagdating po sa shares, nag-increase po siya ng 5,000. Ang diluted earnings per share po, nung naganap po ang share options, nung na-exercise po ang share options is 550,000 divided by 115,000 is 4.78. So, included pa rin siya. Included pa din ang share options dahil nabawasan. So, dilutive siya. The share options is a dilutive instrument. Then, ano lang po natin siya. Ilagay po natin yung amount ng net income, na contribution po na net income sa ating contribution ng convertible preference shares sa ating net income is 100,000 and the shares is 40,000. Tapos po, i-add lang po natin the diluted earnings per share, 650,000 net income divided by 155 net shares is equal to 4.19. So, bumaba pa rin. Ibig sabihin, nung nagkaroon ng conversion ng preference share, ay yung conversion ng preference shares, rather, ay dilutive yung naging effect sa earnings per share natin kasi bumaba. And, ilagay po ulit natin yung amount from convertible bonds na 140,000. Galing po sa ating naging computation. And 30,000 po. Tapos po, compute naman natin yung diluted earnings per share nila. I-add lang natin. 650 plus 140, 790. 155 plus 30, 185. So, 790 divided by 185 is 4.27. Kung mapapansin po natin, simula share options hanggang convertible preference shares, bumaba po siya. Pero pagdating naman dito sa nung na-convert po yung bonds, tumaas po siya. So, the diluted earnings per share that should be reported is 4.19. The convertible bonds are ignored because the effect is anti-dilutive. Kasi from 4.19, nagkaroon siya ng increase na nag-increase siya from 4.19 to 4.27 after considering the bonds payable. Nag-increase. Ang effect nun, kapag nag-increase yung earnings per share is magiging anti-dilutive siya. So, the amount that should be reported as diluted earnings per share is 4.19. It's after the it's after the conversion of the preference share. So, Miss Sai, may question po ba tayo? Clear po ba ang aking explanation?
In problem number 5, we need to find out three things. First is what amount should be reported as basic earnings per share. Second is the total number of potentially dilutive ordinary shares. And lastly is the amount to be reported as diluted earnings per share. So, babasahin ko yung transaction. On September 1, 2019, the entity sold 60,000 additional ordinary shares. I-average natin to for computation of basic earnings per share. Net income for the year ended December 31, 2019 was 6.7 million. During 2019, the entity paid dividends of 30 pesos per share on the non-convertible preference share. Meron tayong 10,000 non-convertible preference shares outstanding noong 2019. So, 10,000 times 30 pesos is equal to 300,000. The 10% convertible bonds are convertible into 40 ordinary shares for each 1,000 bond. Bonds payable is at face amount of 1 million. So, 1 million divided by 1,000 times 40 is equal to 40,000. an exercise share option to purchase 30,000 ordinary shares at 20 pesos per share were outstanding at the beginning and end of 2019. The average market price of ordinary share was 30 pesos during the current year. The market price was 40 pesos on December 31, 2019. Yung exercise price is 20 pesos, which is mas maliit compared dun sa average market price of ordinary share na 30 pesos. So, yung share option ay may dilutive effect sa earnings per share. Warrants to purchase 20,000 ordinary shares at 45 pesos per share were attached to the preference share at the time of issuance. Yung exercise price ng warrant is 45, which is mas malaki sa average market price of ordinary share na 30 pesos. So, yung effect niya is anti-dilutive. Hindi na natin siya kailangan i-present pa. The income tax rate is 30%. Computation per basic earnings per share. Noong January 1, may share outstanding na 300,000. Baka magtaka kayo kung bakit 300,000. Note that the provided information is at year-end. Kung may 300,000 outstanding at the end of 2018, then may 300,000 outstanding at the beginning of 2019. Then on September 1, the entity sold 60,000 ordinary shares. I-average natin siya because September 1 to December 31 is 4 months. 60,000 times 4 over 12 is equal to 20,000. 300,000 plus 20,000 is equal to 320,000 average shares outstanding. Then, the entity had a net income amounting to 6.7 million. Ilalas natin yung preference dividend na 300,000. Naka-state naman yan sa problem. Net income allocated to ordinary share is 6.4 million. 6.4 million divided by 320 average shares outstanding is equal to 20 pesos basic earnings per share. Second question is the total number of potentially dilutive ordinary shares. Yung potential ordinary shares from bond conversion is 40,000 because 1 million face amount ng bonds is divided by 1,000 times 40 because yung convertible bonds are convertible into 40 ordinary shares for each 1,000 bond. I-add natin yung potential ordinary shares from share option na 10,000. Paano na-compute yung 10,000? May share option na 30,000. Ilalas natin yung assumed treasury shares na 20,000. 600,000 na proceeds from exercise ng share option divided by average market price na 30 is equal to 20,000 treasury shares. So, 30,000 minus 20,000 is equal to 10,000 potential ordinary shares from share options. Last is diluted earnings per share. The net income allocated to ordinary share is 6.4 million in the computation of basic earnings per share. Walang income sa share option because mas mababa yung exercise price compared sa average market price. Meaning, mabibili ng holder yung ordinary shares lower at prevailing market price, which yung effect niya sa entity is magkakaroon ng increase sa loss. So, meron tayong 6.4 million na net income for diluted earnings per share. I-adjust natin siya by adding the interest expense on bonds na 70,000. 1 million times 10% times 70% na, which is the percentage net of tax. Tax rate is 30%. So, yung net income for diluted earnings per share is 6,470,000. Doon naman tayo sa shares. May 320,000 na average share outstanding in the computation of basic earnings per share. Then, may share option na 10,000. Then, may potential ordinary shares from bond conversion na 40,000. So, magkakaroon tayo ng 370,000 total number of shares outstanding for the computation of diluted earnings per share. So, i-divide natin silang dalawa. Ang sagot is 17.49 diluted earnings per share.
For our problem 35-6, West Company had earnings per share of 150 pesos for the current year before considering the effects of any convertible securities. No conversion or exercise of convertible securities occurred during the year. However, possible conversion of convertible bonds would have reduced earnings per share by 750. The effect of possible exercise of share options would have increased earnings per share by 1 pesos. The question we have here is, what amount should be reported as diluted earnings per share for the current year? Para po sa ating solution, to compute for the diluted earnings per share, we need to know the basic earnings per share, which is given of 150 pesos for the current year, and the effect of possible bond conversion, the 7.50 reduced earning per share. So 150 pesos minus 750 is equals to diluted earnings per share of 142.50 pesos. As a rule, the effect of the possible exercise of share options is ignored because it increases earnings per share and therefore it is anti-dilutive. Note that the maximum amount that may be reported as a single presentation of earnings per share is equal to the basic earnings per share of 150 pesos. Kuha po ba, Princess, kung paano nakuha ang ating diluted earnings per share sa problem number 6? And for the last problem, it will be discussed by Miss Rachel Ansol.
Now let's have the last problem for this topic. Newtown Company had earnings per share of 120 pesos for the current year before taking any dilutive securities into consideration. No conversion or exercise of dilutive securities took place during the year. However, possible conversion of convertible preference shares would have reduced the earnings per share to 119 pesos. The effect of possible exercise of ordinary share warrants would have reduced earnings per share by an additional 2 pesos. There are two things asked in this problem. First is the maximum amount that should be reported as a single presentation of earnings per share, and the amount to be reported as diluted earnings per share. Finding the answer for question number 1 is very simple. We just have to note that the maximum amount of earnings per share is equal to the basic earnings per share. Thus, the maximum amount to be reported as a single presentation of earnings per share is 120 pesos. On the other hand, the minimum amount is equal to the diluted earnings per share. For question number 2, we can get the diluted earnings per share by simply deducting the effect of possible conversion of preference shares and the effect of possible exercise of share warrants from the basic earnings per share. So we have 120 minus 1 for the possible conversion of preference shares and less 2 for the effect of possible exercise of share warrants, amounting to 117 pesos of diluted earnings per share.
The last part of this video is the summary of the Chapter 35, Diluted Earnings per Share for Multiple Potential Ordinary Shares. The formula for diluted earnings per share is profit or loss plus after-tax interest expense on convertible bonds divided by the weighted average number of outstanding ordinary shares plus incremental shares arising from the assumed conversion or exercise of dilutive potential ordinary shares. Diluted earnings per share is computed when an entity has potential ordinary shares that are dilutive. Potential ordinary shares are dilutive if, when exercised, they decrease basic earnings per share or increase basic loss per share. Diluted earnings per share is not presented if the effect of the potential ordinary share is anti-dilutive. Note that the earning per share is decreasing, which means that the potential ordinary shares are dilutive. Dilutive potential ordinary shares. The potential ordinary shares shall be treated as dilutive when and only when the conversion to ordinary shares would decrease earnings per share or increase loss per share from continuing operations. Examples include options, warrants and their equivalents, convertible instruments, contingently issuable shares, contracts that may settle in ordinary shares or cash, purchase options, written put options. Take note that where more than one basis of conversion exists, the more diluted basis is used and the computation of diluted earnings per share. That is all for my report. Thank you and good day.